Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having an amazing day. We're going to take a look here, of course, at Bitcoin and obviously try to understand what's going to happen next and just evaluate a few key indicators, of course. I think we're going to look at volume, which makes the most sense, as well as, of course, the larger time frames too. Maybe take a peek over at the weekly and the monthly, kind of help identify the overall trend, right? Because again, the trend is your friend and you need to kind of truly understand that and get on that same page essentially. So, just so you know, if you're new to the channel, not a financial advisor, been trading for over 15 years. My goal is to help you become a better trader, and hopefully you can learn a thing or two here today. But more importantly, stay abreast on what's going on. If you want to become a better trader, CryptoCache.tech is the website. I send signals. I have a trading academy and community. You learn how to become a better trader start to finish. So taking a look here at the weekly correction, this is the monthly for Bitcoin. We're going to start with the big time frame, work our way down essentially, and kind of see from there what's going on. Now, on the monthly, just a couple of things we need to try to understand and acknowledge. First of all, we're above the 50 and the 100-day simple moving average. I enabled the 100 here today, kind of give some examples, of course, on the weekly, just so you understand. But generally speaking, I like the 200 and the 50. Those are the both most effective times. But at this point here, we can see we're well above both moving averages. And that is not anything to bat an eye out because we've always been above the 50-day simple moving average on every single time frame, minus, of course, 1 month in March, which was coincidentally the COVID pandemic, right? March 2020. So just keep that in mind. That's essentially what we're looking at there in that sense. The moving averages are going to continue to work well. So I'm not saying the price is going to drop down to 20,000, but just know it's trending right around 19/20,000 presently. So we still got room for downtrend, of course, if it were to happen, but the likelihood of it going below that is quite low, right? Again, we'll bridge that gap when we get there, but just that's a good consolation. Another consolation here is, of course, the RSI. So if you can see the RSI, it has rarely gone below 50 on the RSI. So back in December in 2014 to basically October, and then one more time back in November to April of 2019. And then once again, of course, in March 2020, it touched and just barely came below 50 on the RSI. So we're getting close to 50 on the RSI. That tells me that we're getting close to the potential bottom here. Once again, this is the oversold, overbought scenario. I'm willing to guess we've seen a lot of volume in the last 24 hours, more so than the last couple of months, so to speak, based on this simple sentiment alone. Okay, so this is a big thing to understand. RSI is going to potentially help us. It does mean we could go a little bit lower. 30,000 is possible. I think that's still in the cards, but on the grand scheme of things, that's a good sign. The adverse potential sign here, once again, is the MACD divergence, which we had happen last month officially as far as a crossover is concerned. Doesn't mean it's going to last forever. It can, it has proven to last a long time. But once again, 2018/2019 was a different time frame, right? We didn't have a Russia-Ukrainian war. We didn't have a lot of things going on at that time, the pandemics, etc. So just keep in mind, we kind of have a recipe for disaster with everything going on, but it doesn't mean that we're just going to the value of Bitcoin is going to just dissolve, okay? I think we're probably just fine. I do feel like 30,000 would probably be the most immediate lowest point, but once again, we got 20,000 as a potential support level here with the 50-day SMA, okay? All right, so that's how the monthly looks. All in all, better, more, I would say more advantageous versus disadvantageous. Yes, the MACD is diverged, but we have a lot of other mitigating factors, okay? Looking at the weekly here, we can see the price is trending closer to the 100-day simple moving average. So that's the one thing I want to kind of bring to your attention here. The 100 is notoriously a pretty strong support level. And of course, we can kind of see all of them kind of merge together here, so to speak, previously back in 2020, but that was a weird time, right? Which we're going through right now. So when weird times happen, the 200 is proven to be a very strong support. So just keep in mind as well, the 200-day SMA, the price rarely comes below the 200 SMA. So once again, that kind of coincides with 20,000. Again, not saying that we're going to hit 20,000, but if it comes down to that point, heaven forbid, whatever the case might look like, I think we can still rely on the 200 in that sense, whereas 20,000 should be the most lowest point. We also have this little shelf here for about almost about a month, you could say, back in November of 2020, where the price kind of capped out at 20,000 and then it took off from there, okay? So once more, 20,000 is likely the ultimate bottom in my personal opinion, but I still think that 30,000 is more realistic in the immediate future. All right, let me explain what I mean by that here in a moment, but to touch on this here on the weekly, we are under 50 in the RSI, and we have a MACD potential convergence perhaps in the next few weeks, all right? So again, Downtrend is still very likely. This could continue a lot longer just because, we have this potential shift here in volume does not mean that it's going to turn right around. But it is a good sign in the sense that the convergence is potentially going to happen. And of course, RSI has to break back up over 50, which kind of puts us right around the 50-day SMA at about 47,000. So in my personal opinion, I feel like we've got to break somewhere in the range of, that 46,000/$47,000 shelf, which we kind of almost touched on recently. But more importantly, get back up over the 50 on not just the 1 day, but also the 1 week. Those are two important factors. But I like that the 100-day SMA is essentially working as a support level there. All right, so again, the weekly isn't terrible. It's kind of more so fair to middling. Just it's indifferent. It's got a couple of things going on. But once again, ultimately, the worst case scenario I feel is the 20,000, based on the simple fact that we have the 200-day SMA here as well as the 100 on the monthly. Okay, so those are good things essentially in the big picture, right? Now looking here at the 1 day, this is where it gets kind of funny. Now I'll draw some Fibonacci retracement levels. In fact, we could do that now. We can base it based on the most recent decrease, right? So I'll just go ahead and put that out there and see kind of roughly what we're looking at here. Okay. Again, this is a rough estimate here, but we can obviously see the resistances, right? Right at about 40,000, the strong resistance there, of course. And what do you know? Right around 40,750 to 42 here, based on Fibonacci's major key level resistance. And once again, that kind of reiterates the previous sentiment of 41,500 as the major resistance level. Now, I don't love that 41,500 is a resistance because we're way down at 36, but hey, that's just the way it goes, right? And at this point, we got to kind of understand that right about 44.5, we could just say round number 45,000 is going to be a key level resistance that's going to be difficult to break once we get there. Okay. Again, I'm not trying to stack the cards against Bitcoin, but it's an uphill battle right now, and to get right out of the doghouse, I think it's foolhardy to think that it's going to just bounce right back. But why don't we take a look at some other indicators that I think are important, because not a lot of folks understand this or look at it, and that is volume. We've seen a very large amount of volume in the last 24 hours, which this candlestick hasn't even come close to finishing yet, telling me there's a lot of buying pressure at this range. So the likelihood of the price coming down much lower than 35,000, I think, is unlikely. Again, we're going to need to see some more pricing and some more, more volume, of course, and some sideways action between now and obviously the time which either decides to go up or down. But generally speaking here, we can see that 35,000 on the 1 day candle, essentially, is a key level support, right? So that being said, right around 35,000, that happened in January on the 23rd and 24th. So roughly 1 month ago, today, we had an all-time low bottom if you do not count the candle wicks, right? But the amount of volume that we're having today is much higher than we've seen in the past month, and unless you go back to January and or December. And that is telling of the fact that whomever is investing at this price point doesn't want to go much lower. They feel it's a good value, and I think that the average person or the average, whomever it is that's actually buying all this, they feel that 35,000/36,000 is a very good value. Okay. So again, try to recognize that and understand it. Yes, we had a pretty significant sell-off, but it's recovered quite nicely, all things considered. Okay. So again, those are excellent things that we want to kind of understand. We're also still trending closer to 30 on the RSI. So the last time we got under 30, of course, was in January. That was a tough time. And then we came close, technically, didn't even come below in December for the first major sell-off, right? So that being said, if you take a look back here, of course, this extreme sell-off, that amount of volume is probably the highest we've seen in some time. And that essentially recovered and continued to go sideways before it continued to progress downwards, right? It took literally, about 2 weeks worth of trading to come down. So for us here to, conceptualize the situation, the realistic nature here of the price going sideways and up is much higher than it going sideways and down, at least in the immediate future. And I say that based on the volume alone, right? It doesn't necessarily mean that it's not going to continue to drop, because this crazy world stuff happens right now and that's throwing things off. But this overall trend, I feel, is coming to an end, the immediate trend. And I think that we could, in fact, see some reprieve. It'll probably be something similar to this, a slow crawl to the upside, but it's more likely than not to go up than it is down if you exclude the news, which is a weird thing to say because there's no way to truly understand what's going to happen with the news. It's going to continue to, things get worse before they get better, right? And we could and should expect it to get worse. It's already getting kind of crazy in the last 24 hours. I've seen some very unfortunate footage, and my thoughts and prayers go out to you, those in Ukraine, and obviously Russia as well. Everyone's included, and obviously the ones doing all this work are likely the ones not in control. Regardless, what I'm getting at here is that we shouldn't expect the sky to fall per se. Yes, we have 20,000 as a key level support, I would say, on larger time frames, and that's a long ways from where we're at right now. But between now and then, the amount of volume we've seen here is telling. It tells us a lot. Okay, so let's go ahead and work our way down and kind of call it a day here. Sorry, I kind of just went on a little rant there, but I need you to understand that volume, extreme amount of volume today is extremely helpful, knowing that we shouldn't expect the price to go down immediately. It'll take a little while for those bulls to kind of lose that control because I feel like they've gained it. Anyways, we got a MACD divergence, of course. We need to acknowledge that, and obviously we're getting closer to 30. Just know every time we've come close to 30, we've been able to recover and start trending back up in most cases, especially when it comes down below 30. So if we do happen to sell off further and go under 30, the likelihood of it coming back at that point would be also high. And again, not an extreme recovery, but for the most part, we can experience the price coming and bouncing off at 30. It's a very common support level. All right, let's go ahead and take a look at the 4-hour and see kind of what's going on here. All right, now what we want to do is just acknowledge a couple of things here. First of all, we got a MACD convergence forming. That's extremely important. That does help us see that there's a shift in momentum. Obviously, it's taking a little while to happen based on the fact that we had a significant decrease, but that is relevant. We also bounced off at 30 effectively as well on the RSI too. So oftentimes when you see an RSI close to 30 on the 4-hour chart, that does tell you a lot. Especially if you see that in combination with the MACD convergence forming, there's a great chance, or a larger chance based on this data alone, that the price should continue higher. And once more, just drive this home a little bit further. Look at that 4-hour candlestick. Look at how much volume that is. That means that the selling pressure wasn't great enough to have the price go down any further. And even though this was somewhat of a break-even candle, it's really telling us a lot that the bulls are in total control and that they're not willing to let the price come any lower than 35. So we can confidently say 35,000 is a pretty strong key level support, and that based on the recent volume, we can acknowledge that as well. Keep this in mind though, there's not a lot of volume at the current price point. So the bottom, for lack of better terms, could effectively fall out because again, we don't have a lot of support below this level unless you go all the way back to summer of last year. Then we do have more volume. So again, in the most recent past, low volume in general at this price point. But year, 2, 3 years ago, etc., you kind of add everything together, we do still have a decent amount of volume between 30 and 36,000. Okay, so those are good things. So to me personally, I still, even though 20,000 I see as a potential worst case scenario, I don't think we're going to see anything lower than 30,000 in the immediate future. That's just my personal opinion. I think we're going to see a recovery here soon. This is shaping up to be one of those scenarios where the value is getting too good, and retail investors, etc., they're all going to want to try to get it. All right, and then it's obviously tried to get in here today in this most recent 4-hour candle. Okay, again, just little things to acknowledge and understand. It kind of just building a case, so to speak, here that there's more, I wouldn't say bullish type of data here, but there's a lot more data kind of reaffirming the fact that we have a decent amount of support at this level, even though the bottom dropped out yesterday. That happens when crazy world events occur. Everyone just, fire sale, right? But now they're realizing that, hey, 35,000 is a great value, so we're going to buy back in. That's a good sign. We need to see that. All right, very last thing here, we'll go ahead and call it a day, is taking a look at TD sequential. As obviously we saw this here, logic would tell you that we shouldn't go any lower than a 9. It just kept on going down further, and obviously not ideal. But that coming down that low is allowing this to recover here nicely. And what's cool about this is this nice little staircase pattern so far, right? So we come up to a 5 essentially, we got a little reset, and back up to a 5 again. So potentially we could see the price continue up higher to a 9, and then see some type of resistance somewhere in the range of about 36.8. So maybe just say 37,000 is a round number. That is a potential likelihood of a place in which the price might get stopped out. Another thing to remember too, and just kind of based on this most recent data, if you look at this recent low, it didn't come any lower than 36,600. So that could and very well should be the new key level resistance we want to concern ourselves with. So 36.6 to 37,000 will be a resistance channel, kind of a range there. And then, of course, if the price were to retrace back down, we shouldn't expect anything much lower than 35,000. Okay. Again, that's the general concept there. So I think in this point right now, we're probably going to see some channeling between 35 and 37 and potential more so for an increase versus a decrease, but we need more time to see what happens with the news. Again, crazy stuff happens, weird, whatever declarations are going to occur, we could continue to move the price violently and strangely. So we got to acknowledge the fact that it's a weird time. So I got to just kind of drive this home, and I've mentioned this to my community too. Hold off, maybe, again, depending on the type of trader you are. Doing these short-term swing trades are difficult and treacherous for the moment because you can see these large spikes up and down. It's like Bitcoin doesn't truly know what it wants to do. And a lot of it is that knee-jerk reaction that happens based on what's going on in the world. This isn't traditional, indicators, so to speak. You can't use like traditional TA and be highly successful. You're kind of almost gambling at this point because there's a lot of variables we can't consider. So my advice to you is to dollar cost average, take a small amount of your current portfolio that's available in Tether and or USD, whatever that case is, and invest it carefully as the price either continues to go down or up, right? I mean, I can tell you 36,000 is going to be a heck of a value in 5 to 10 years when Bitcoin is, trending closer to 7 figures or obviously 6 figures. I think that's inevitable. It's just a matter of time. So, is it at 36.1, are you going to complain or are you going to be upset with 40,000? It's not going to matter in years. That's my personal opinion. So try to understand that. Dollar cost averaging is going to get you a much better average price. As the price continues to go down, you just keep adding a little bit more. Try not to find the bottom because you'll never truly find the bottom. Okay. Last advice also is to keep some money set aside too. I know it seems kind of counterintuitive, but dollar cost average as much as possible, but also keep some money available so that way you can continue to DCA as the price comes down. Because heaven forbid we see a $20,000 to $30,000 price range, it would be nice to have the opportunity to be able to invest in that instead of sitting on your hands and hoping for it to recover. Okay. And by no means am I telling you to sell everything and just kind of sit on the sidelines. If you've already done that, great. Maybe continue to do so and DCA. But if you're holding right now, which a lot of people are, continue to hodl your bag, so to speak, right? There's nothing wrong with that. Just, if possible, introduce, as much as you can back into it and continue to DCA whenever you can. I know it's much easier said than done. Of course, not everyone has that opportunity, but I just say invest wisely, and the smartest investors are those who slowly continue to invest all the time. Like me personally, I DCA weekly. It's just a common thing that I do. And what I do is I set limit orders at these crazy price points and eventually get filled. I didn't think I'd get filled at 34.5, but I did. And the reason why, of course, is I send out signals to my community, and one of those signals recently is mostly just a public service announcement of what DCA targets we want to have for Bitcoin and potentially other coins as well. I'm working on that, of course, but generally speaking, the concept is to ensure that you understand that this isn't the end of the world or the end of the market, so to speak, right? Unfortunately, a lot of crazy stuff happening, but at this point in time, you just got to be cautious and careful. So I'll stop talking. I'm probably going in circles. I hope you learned something here. Of course, that's the whole point of this, is to help educate you outside of just TA, is to be a good investor as well. Because again, this is investing. Please remember that. Do not gamble your money in crypto. It rarely works. Sometimes you get lucky, but for the most part, you will. All right, anyways, just want to be the voice of reason. Thanks again for listening, and I hope you learned something once again. CryptoCache.tech is the website if you'd like to consider becoming a better trader and or just learn more with an amazing, dynamic community. And I can't thank you enough, too. To my current community members, you're amazing. You're awesome. I truly appreciate you. And thanks again for making my life a better place. I hope you all have a great rest of your day. We'll see you in the next video. You take care.